Hey there, Singaporean investors. If you're keenly interested in NTT DC REIT and you're wondering whether to subscribe to this massive IPO or perhaps even consider passing on it right now, you are absolutely in the right place. I'm Iggy from the Investing Iguana, and in this video, I will provide you with a candid, balanced breakdown focusing on 3 compelling good points that make this REIT attractive, and then, just as crucially, 3 significant bad points or red flags you absolutely need to be aware of. And make sure to stick with me all the way to the end, because in the final segment, I will give you my personal investment advice on whether to buy, sell, or hold this particular REIT for your portfolio. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We've crossed the 1 million mark for reads, and with over 900 videos and 500,000 watch hours, content is literally all I do. I also focus on regional and global economic trends, giving you that broader context. If you're serious about uncovering the hidden gems and potential pitfalls in the Singapore market, you'll want to hear this. Let's dive right into the analysis. NTT DC REIT is launching what will be Singapore's largest REIT IPO in over a decade, seeking to raise $773 million US. This isn't just another property play. It's a strategic bet on the digital infrastructure boom that's reshaping our economy. The offering opens today, July 8th, at 9 p.m. and closes on July 10th at 12 p.m., with units expected to start trading on July 14th at 2 p.m. Now let's kick things off with the positives. For NTT DC REIT, one of the most compelling strengths we've identified is its exceptional institutional validation from world-class investors. Think about it. In Singapore, when GIC, our sovereign wealth fund, commits $101 million US for a 9.8% stake, that's not just money on the table, it's a strategic endorsement. This REIT acts like a fortress protected by institutional moats that shields it from speculative volatility. We've seen this play out with the breadth of Cornerstone, investors collectively subscribing to 16.8% of the offering, including AM Squared, Viridian Asset Management, and other quality institutions. This level of institutional demand, combined with sponsor NTT Limited's 25% holding, provides a strong foundation that goes beyond typical REIT launches. When the world's most sophisticated investors are backing something, that tells you the underlying thesis has been thoroughly vetted. Moving on to our second good point, NTT DC REIT's strategic asset positioning in prime global data center markets. For many Singaporean investors seeking exposure to the digital economy, this REIT offers access to assets you simply cannot replicate elsewhere. The portfolio includes properties in Northern Virginia, the global data capital, where vacancy rates hover around 0.9%. And these aren't secondary markets. They're the tier 1 locations where hyperscale cloud providers and AI companies compete fiercely for space. This isn't just about location. It reflects the REIT's 94.3% occupancy rate and 90.7 megawatts of IT capacity positioned to capture the AI-driven demand surge. Consider how this exposure to digital infrastructure could compound your returns, especially as data center power requirements are expected to double within 5 years. It's certainly a compelling growth story in today's AI-dominated market, isn't it? And finally, the third positive aspect worth highlighting for NTT DC REIT is its compelling 7.0 to 7.5% distribution yield with visible growth mechanisms. It's not just about what the REIT is yielding now, but how sustainable and growing that income stream appears. This REIT has strategically structured 74.6% of contracts with fixed 3.3% annual escalations, plus an additional 3% with inflation-linked increases. These built-in rental escalations are expected to provide steady distribution growth over the weighted average lease expiry of 4.8 years, potentially leading to significant income expansion for unit holders. The commitment to distribute 90% of distributable income, combined with these contractual escalations, creates a powerful income compounding mechanism that most traditional REITs simply cannot match. Now, let's turn our attention to the flip side, the 3 critical red flags you need to consider before making any investment decisions on NTT DC REIT. The first significant concern is the relentless pace of technological change threatening asset obsolescence. While growth in data centers is good, the speed of technological evolution can be a serious burden. Current facilities risk becoming stranded assets as power densities climb from today's 36 kilowatts per rack to 50 kilowatts by 2027, with AI-specific centers potentially hitting 80 to 100 kilowatts. This could impact the REIT's ability to maintain competitive positioning without massive capital expenditure, potentially affecting distribution sustainability as cooling systems require fundamental overhauls from air to liquid cooling, representing millions in retrofitting costs. How much technological disruption is too much? And at what point does it become a real threat to unit holder value? The pace of change in this sector means continuous capital investment just to stay relevant. Our second red flag is the dangerous level of customer concentration that could devastate cash flows overnight. Even dominant data center operators aren't immune to tenant departure. While specific tenant concentration data wasn't disclosed in the prospectus, data center REITs typically face significant concentration risk from hyperscale cloud providers who can represent substantial portions of rental income. This concentration could erode the REIT's financial stability and put enormous pressure on distributions if any major tenant decides not to renew. It's a classic case of putting too many eggs in too few baskets. Will the REIT be able to diversify its tenant base quickly enough? This concentration risk is something Singaporean investors, who often seek stability, must seriously consider. For even more granular data, in-depth charts, and a full written breakdown of NTT DC REIT's financials and strategic outlook, make sure to check out our Substack. The link is right there in the description. Finally, the third major concern for NTT DC REIT is its capital-intensive nature that could drain cash flows faster than expected. Data centers are capital-intensive beasts requiring continuous investment, with the average facility costing 10 to 12 million US dollars per megawatt to construct. And that's just the beginning. With power representing up to 70% of operating expenses and cooling alone accounting for 43% of electricity consumption, these facilities are extremely vulnerable to utility rate increases. This operational leverage is something that could amplify both gains and losses, making the REIT highly sensitive to energy cost inflation. What happens if utility rates spike significantly, or if major infrastructure upgrades become necessary? These are the operational realities that could quickly erode the attractive distribution yield that initially draws investors to this REIT. All right, we've weighed the good against the bad for NTT DC REIT. We've looked at its blue-chip institutional backing, its premium asset portfolio in Tier 1 markets, and its attractive income profile with built-in growth. But we've also squarely faced the challenges: the technology obsolescence risk, potential customer concentration, and the capital-intensive operational leverage. So, what's my overall assessment for NTT DC REIT? This is a REIT with exceptional institutional validation and exposure to a secular growth theme, but it's currently navigating some significant structural risks that demand careful consideration. Considering all these factors, my personal rating for NTT DC REIT is a hold with cautious optimism. My clear justification for this is that while the underlying digital infrastructure thesis is compelling and the institutional backing provides credibility, the technology obsolescence concerns and capital intensity create too much near-term uncertainty for a strong buy recommendation right now. Similarly, the quality of assets and growth potential prevent a sell rating, as there's still significant long-term value in the digital infrastructure build-out. For Singaporean investors, my strategic advice is this: if you're looking for exposure to the digital economy and can stomach the risks, this REIT merits consideration as a 3 to 5% portfolio allocation rather than a core holding. However, for those seeking pure income stability, I would advise caution. Wait for clearer signs of operational performance and technology upgrade strategies before committing significant capital. This REIT, while promising, requires careful monitoring of occupancy rates and tenant renewal patterns. Is it a good fit for your CPF portfolio? Potentially, but only if you have a very long investment horizon and understand you're buying into a growth story rather than a traditional income play. The public offer opens July 7th at 9 p.m. and closes July 10th at 12 p.m., with units expected to commence trading on July 14th at 2 p.m. Given the significant institutional backing and the structural growth drivers in the data center sector, investors who understand the risks and opportunities should consider this offering as part of a diversified REIT portfolio. So, we've broken down NTT DC REIT piece by piece, looking at its strengths and weaknesses, and I've given you my personal verdict and strategy advice. If you found this level of in-depth, actionable analysis truly valuable, please give this video a like, share it with fellow investors, and subscribe to the Investing Iguana channel so you don't miss our future deep dives. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $1 a month, less than a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today.